Decentralized finance, or DeFi, is growing fast with new building blocks being created. Many projects in the space are just copycats of an established category, but from time to time something new and innovative emerges and creates a whole new category or building block. So I've personally been building software and teaching people about the crypto and Web3 space for many years now, and today I'll be taking a look at Pendle, a project that's created a whole new building block or category in DeFi. So in the next few minutes, you'll learn a bit about how it works and how you can make money with it. So DeFi is being built in a distributed way around the world by entrepreneurs and innovators who are continuously experimenting with new ideas. So it's hard to know what ideas will actually take off, right? Over the years, certain projects have become category defining, as I just said, such as Uniswap for decentralized exchanges or Aave for lending protocols on, DeFi lending protocols. Many copycats have come along and they tweak things, but they're essentially clones. But in the midst of these recycled ideas, Pendle really stands out as a unique project that's built something nobody else has built so far and is essentially a new category in itself. But what does Pendle do that makes it a new building block or category in the DeFi space? Well, they literally describe themselves as liberating yield. Let me see if I can find it down here. You could see here, they say they are liberating yield, right? Now, when you take a look further down, you scroll down a bit here, you can see that this is the key thing they do. Yield tokenization. They split any yield-bearing asset into separate yield and principal components. Principal and yield. Now, the simplest explanation for what they're actually doing is that they let users tokenize and trade future yield from yield-bearing assets as if they were any other asset, right? So you can actually buy, sell, and lock in your returns ahead of time, effectively turning that, passive income into a tradable market. So we'll have a look at how it works. But before we do that, if you do want to learn how to grow real lasting wealth through crypto, and join a community of like-minded individuals and access over $1,900 worth of courses entirely for free, then click the link in the description below and I'll catch you there. So how does it work? At the core of Pendle's innovation are these principal tokens, like it says here, principal and yield. And they simplify these to PT and YT tokens, principal token, yield token. Understanding these is best done for an illustration. In this example here, you can see that Pendle takes Athena's SUSDE that represents its staked USDE token that's earning interest, and then lets the user split it into two parts, where the principal token represents the base token itself, and the yield token gives you the right to claim the future yield that the underlying SUSD asset is generating, right? So there's one thing which is the base token, and the other thing is the rights to the yield that this token would get. So you get this split. And this is really quite a fascinating thing that no other project's really done. So it gives users a lot more options with their assets, with their yield-bearing assets. So they can, for example, sell their future yield now, or lock in profits, or speculate on how much yield something will earn further down the line, right? You get these YT and PT assets, right? As you see here, the YT assets, you can, they have variable yield and you could speculate on them. And the PT assets end up selling at a discount, so they effectively get a fixed yield. So you can buy, a discounted price for something that when it reaches maturity will have that original price. We'll look at this a little bit as we carry on. So as I said above, with a PT SUSDE token that has a maturity date, all of them come with an expiry date. They're essentially derivatives on the original assets, right? With this, you're essentially buying $1 that you'll get back in around 1 year's time, but at a discount depending on the market. So for example, if you buy a PT today for 94 cents, you'll be able to redeem it for $1 in 1 year, and this essentially gives you a locked-in return that in this example translates to a 6.4% APY, right? And if you buy thousands of these, you'll get that 6.4% APY in a year. PTs, they offer no guessing, no volatility. They just give you fixed yield for holding something until maturity. The YT side is where the risk lies, right? Here you're basically buying the claim to this variable yield that the underlying asset, like the SUSD, will collect over the next 1 year. Right now, the market might be pricing that yield around 7%, but if you believe the actual yield will be higher because it will fluctuate over that year, you can buy the YT tokens and potentially earn more. It's a bet on future yield. And if you get it right, all the upside is yours. Now, when a YT token reaches maturity, they stop accruing any further yield and become essentially worthless. So, they represent the right to receive the yield generated by the underlying asset only up to maturity date. So this is quite complex sometimes to get to grips with, but essentially it means that when that maturity hits the date, when the maturity date hits, they become worth nothing because they can't be redeemed anymore for any future yield. So they're just a token that has no more utility. Also importantly, YT tokens, if they have an airdrop happening because of the underlying asset, then holding this YT token can also earn you points towards those airdrops. And that's really important. YT tokens have this dual mechanism of both earning you yield and points for potential airdrops, which is where a lot of the kind of magic in Pendle happens. Okay, so let's take a quick look at the market for Pendle tokens. You understand the core innovation, which is this yield tokenization. So, let's get practical. As soon as you launch the app, you're shown this incredibly complex dashboard. So let's have it here. This is the one that you see. This is the markets, right? Now, there's a lot of information here. And essentially, the truth is, Pendle has a lot of things going on, right? Many different tokens and options to really dive into. But I just want to keep the overarching concept here and just show you, the example that I was going over above. So if you click on SUSDE here, then you'll get taken here. And you'll be able to see here that it says, 1 PT SUSD is 1 USD at maturity, right? So that's an important thing to understand. And now you can kind of buy them in a few ways, right? You can either kind of buy them at the going market rate, or you can mint entirely new ones and sell them into the market. So let's just take a quick look at that. Minting takes the SUSDE and creates both that PT and YT token that gets split out, right, from the USDE. And you can do that by clicking here on the mint button. Now, note that you can also click redeem, and that will just be the inverse transaction where it takes a PT and SUSDE and creates a new output, right? But yes, so when you do this minting, you can see in this example here, you'll get these PT and YT tokens that are numerically equal to the value that they will have at maturity. So for example here, 100 SUSDE is currently, as at this moment that this picture was taken, worth 117.28 cents. So on minting, it gives you 117.28 PT and YT tokens, right? This means at maturity, that's what you're going to get, 117, which is the value originally minted at. So that's not surprising, right? You're splitting it down, right? That's what the minting actually does. But if you were to buy these prices or just sell them into the market, that's where things begin to vary, because Pendle's created a market around these tokens. And it depends on what buyers and sellers are willing to pay. So for example, instead of minting a PT token, if you were to buy the same 100 SUSDE, as you can see here, you would actually get 119.2 PT tokens. You actually get more than the 117.28, right? And this is because you're buying them at a slightly discounted rate. That's the rate that the market's going. That's the rate that people are willing to buy those minted tokens from someone else who's minted them, right? This kind of rate makes sense since the buyer is essentially buying something that'll only reach maturity 1 year from now. But it's worth noting that during that time period, they can sell back through the protocol lose a bit of the profit, so they're not locked, to wait, the whole time to get their original assets back. Now, PT tokens are generally low risk bets. They'll get you a return on your money, right? They're kind of the fixed yield part. They're kind of not particularly surprising, right? This discount from the mint price, this delta, this variation is what sets the essential APY that you're going to get throughout the year. Now, the real risk lies with the YT tokens, and in the specific example of buying 100 SUSDEs, you'll get 7,000 YT tokens, right? Because the whole new market gets created for them. Now, at today's APY, that will actually lose you money, according to this, until, assuming you keep it until maturity. But that's because, remembering that at maturity, these tokens go to zero, right? So if you believe that this yield will offset the money you put in, and you're right, then you may find yourself making a profit and or farming points that, and make money through an airdrop, right? Since YT tokens stop accruing any further yield and points when they reach maturity, they also rapidly devalue the closer they are to maturity. So the market for YT tokens is quite complex and varied based on the maturity dates. And this is really where a lot of the risk kind of comes in with Pendle, right? And their YT tokens. They generated these two markets from splitting out one yield bearing token. In this example, SUSDE, but they do it for many tokens. Now, since Pendle breaks down tokens into these constituent pieces, they can offer points for YT tokens, and they've created this points market, right? Here you can pick, PT or YT tokens specifically to try to earn certain points towards certain airdrops. For example, if you select the EUSDE one here, you'll see the YT tokens can give you 45 or 46, almost 46x leverage on points and yield, right? On ethereal points, because that's what this EUSDE stands for rather than the SUSDE. While the PT tokens actually forego points entirely to earn you over 9.8% APY, right? Pendle also have these LP tokens that are related to providing liquidity into their exchange, which ends up being a middle ground between going all in on PT or YT tokens, and helps Pendle provide liquidity for the traders of these assets. So LP tokens are essential for traders to be able to trade in and out of these assets as well. So as you can see, it's quite complex, right? There's a lot going on with Pendle. The key thing here, though, is that Pendle splits out the yield from the underlying token, and then they create these entirely new markets based on farming points for future airdrops. Pendle are aware of just how appealing this can be for risk takers and have a growing points market with many projects running partnerships together with Pendle, giving special point bonuses. Which, this is a win-win for Pendle and the project, as both get more liquidity and users, right? Now, for the sake of this tutorial, I bought $5 worth of YT of EUSDE, just for the sake of it. And so you could see in the dashboard, how the dashboard works. Your positions show up down here, the different chains you're on down here, your total balance here, and any claimable rewards will appear here, right? So you can click claim and start getting those rewards. Now, the dashboard is actually surprisingly clean, considering just how complex the rest of Pendle can actually be. Pendle also makes its money, just a final note, through two sets of fees, right? They have their own exchange for buying and selling these assets, and the closer an asset is to expire its maturity, the lower its fees are. And they have fees for deploying a pool, because now you can actually deploy your own pool for certain yield-bearing tokens that you create. Now, the YT tokens also have a fee. Every time yield and points are earned, Pendle takes a cut of 5%. So a chunk of these fees are then returned to those who decide to stake their Pendle token for VE Pendle, which is the staked version of it. So as you can see, there's a lot of mechanisms going on in this, in Pendle and how it works. Now, if you were to check DeFi Llama, you'll see that Pendle generates around $19 million in annual revenue, placing them in 79th place out of all DeFi projects today. That's quite low, although $20 million is nothing to laugh at, right? it's a lot of money, but you know, DeFi is massive, and there's some projects that are making hundreds and hundreds of millions, and the top stable coins may literally make billions. So to summarize, Pendle's a very innovative and creative DeFi primitive, right? It's done something that no one has done before. In traditional finance, there is something that's relatively close called bond stripping, where the bond is the principal and the coupon, which is basically the interest, are separated and traded individually. But this hadn't been done in crypto before. Importantly though, now you got a good overview of how Pendle works, although honestly I've only just scratched the surface. You know, you can see there's a lot going on there, more complexity when you dive further in, although the core concepts have been discussed. Most importantly, there's nothing quite like Pendle in the market, and it sits as the king of the hill of, you know, this type of product. Plus it seems to be growing pretty fast. As it grows and establishes itself, I'm sure new copycats will emerge, try and take some of that market share. Now, I suggest having a play with Pendle to see if you can earn yourself some points for future airdrops of YT tokens, or make just some solid low risk yields through its PT tokens. Before we finish, if you want to learn how to grow real lasting wealth in crypto, join a community of like-minded individuals, and access over $1,900 worth of courses entirely for free, then click the link in the description below and you'll get plenty more of this and a lot more knowledge, and I'll see you in there.